on the 1 minute chart. It was a 3 hour. By the moment I took it to the short side, the 9 moving average was around 4 hours. But I guess the 9 will get a little bit higher by the time it reaches it, so I put my order a little bit above the 9 moving average in the 5 minute chart. Hello guys on YouTube. Okay, we'll go ahead, and if you have time, I'll go through my trades. I messed up a lot on INO, and I will show you what I did there. Then I might go through my other trades. I didn't take it to the long side. It was short. This is a short. Like this short right there, I left 10%, and because of this W shape right here, I have partialed my last portion to the short side. Remember when I told you that my signal to exit is usually if I see a setup forming against me, or if it's going to my break even. So here I took this thing to the short side here. I took some partials there, left 10% or 15% of my position to run. Then I see a W shape forming along with an ABCD pattern, and that was my signal to simply exit. It was almost as a hammer, and I knew that it might not work really well, so I just bailed on it. No, this wasn't long. This was the last partial from my short. No, shows me no support TIF. That's weird. Make sure click on help on DAS, live chat support, and text them to figure out what's wrong there. You're welcome. Yeah, it's interactive brokers. Usually there are a lot of stocks. I mean, not stocks, a lot of shorts for some stocks. I almost never have problems with shorting stocks with IB. There could be some problems on low floats sometimes, but I rarely do trade them. And if I trade them only for trend continuation or breakouts. So I don't think I need shorts on low floats most of the time. I hear that Centerpoint has a good inventory of shorts, but they won't open an account for me. So let's see what you did there, Lou. Traded PTON and you took it to the short side and you got immediately stopped out right there. A little bit of tight stop loss, but I would have used the same stop loss you used right there. One thing I would have done is I would have definitely re-entered right there. Selling pressure wick on the 1 minute chart, selling pressure again, making a new 1 minute low, getting you stopped out, but getting sold off again. 100% I would have re-entered on this thing. You could see how persistent I was there on my INO trade, and to be honest, INO gave me a hard time. Some of the trades were good, some of the trades were bad. So here I saw this selling pressure right there, shorted it, and it got me stopped out. This was 2 hour loser. I got slippage in this one. Here I struggled a little bit. I shorted it the first time with the stop loss above the wick, added to my position and put my stop loss a little bit above the buys, and I got stopped out. This was 1 hour loser. After that, I shorted it one more time, added to my position a little bit more, saw it going in my favor, sort of double bottom, added to my position and moved my stop loss to my last partial right here just to have 1 hour loser, not more than that. And it got me stopped out one more time because I just saw that it's still working. Eventually it didn't, it kept going higher, so I just let it do whatever it does. And finally I got the short with around 7 cents stop loss, and I got $1 move out of this. So this was around 10 hours realized right there, and this is the last 10% down there. If you see that the setup is still working, it's still going in your favor. This was the last trade for your max. Okay, then that's totally fine. I mean, if it hits your max loss, you don't need to force it. You just stop out, similar to what you did. So you did nothing wrong on this setup right here. And this was PTON. I think I missed one trade. There it is. Let's see what you did here. Was this short? This wasn't a bad short as well. You're just getting a little bit unlucky there. I mean, look at this. Clear double top right there, or W shape on a reverse ABCD pattern. This is perfect. You are waiting for a new 1 minute low, which is really patient out of you right there. And then you put your stop loss above the bodies, not above the wicks. But it's just, even if you put it above the wicks, it would have got you stopped out right there. You just didn't get lucky. And look at this. You read the price action on both of the trades really well. Short on MRNA and short on PTON, both of them worked. You just didn't get lucky with the stops and it got you stopped out. It's totally fine, that happens. These weren't bad trades. Both of them were really good trades. I like them. This just happens to everyone. Getting stopped out to the penny before 12 o'clock. And guys, how many of you here had this time where you are getting into a really good trade which wicks a little bit above you or gets you stopped out literally to the penny and then it just goes without you? I mean, I've been there a lot. This happens to me, and I'm sure a lot of other members here who are watching this had been in that place as well. All the time, Stefan. You see that, guys? Hey, Adrian. See, this happens, so don't get mad. You are really good. You read the price action really well. You had a little bit of losing streak 3 days, but you didn't get past your max loss all those 3 days, keeping your loser smalls. And what was your winning streak, the biggest winning streak you had? One week. So you see, 3 losing days in a row, and you had 7 days winners in a row as well. That's really good. Just keep your losses small and green days will come as well, similar to those losses. I mean, what analysis of the short on the top of INO? RLM, this was a parabolic reversal. I will get to it once I'm done with the trade reviews. And guys, we are having a lifetime webinar, a success webinar on the 1st of July. I'll be talking in detail about those reversals, how to find these type of stocks to trade them, what scanners I'm using, how I'm using the scanners, I mean all the reversal candles and the confirmation. It will not be on at 8 p.m. It will be at 5 p.m. because 8 is a little bit late here for me. Whose trade was this? I think I missed the name. Ralam, let's see what you did there. Ralam traded INO. You took it to the long side, and I guess that was another long. Looking at your trade on it, I think you're really long buys on INO, right? And was this a long down there? Let me get the pen again. No, the second was short. Okay, I can tell why we shouldn't have taken it not to the long side, nor to the short side right here. The first long was perfect. It was totally fine. Look at this. You are having the pre-market level right here. At the open, it's wicking down. It's breaking this level right here. It's getting into the pre-market low, respecting the pre-market low, bouncing out of it, and then it's breaking that level where you took the entry. This was a perfect long. I love it. Nothing wrong on this one. Took a partial, didn't take another partial. You saw that it's engulfing, getting half of the candle, so you exited the rest. Really smart of you. Good job on this trade. Here you took it to the short side at the break of the pre-market low, or maybe the second one was also long, this one, right? Yeah, I wouldn't have taken this right here to the long and to the short for one reason. First of all, since we started talking about the short, you see it's breaking the pre-market low, breaking the low of the day, and some might consider taking this for a break of the low of the day. However, not every break of the low of the day or of pre-market level means that this is a good setup for a break of the low of the day or the pre-market level. In this case, it wasn't good because it already did a huge move right there, right? This is a huge candle, and then it's breaking the low of the day. Who will be shorting it when it's already made a huge drop like that? If someone took it to the short side on an engulfing or on an engulfing crack right there, at the break of the low of the day, they will start taking partials. There is no reason to short right there, right? Unless it's making sort of a pullback. So if this break happened on kind of a descending triangle, and then you take your entry, this is perfect. You'll have a tight stop loss, a technical tight stop loss. You saw it trying to break the low of the day many times, and then finally it's breaking it. So how it's breaking the low of the day really matters. Now, why wouldn't I take it to the long side right here? Because to take it to the long side, you need a little bit of confirmations, right? The only confirmation we had here is that this is a level from the pre-market and this is the low of the day. Only that, right? Nothing else. There is no confirmation candle. There is no hammer down here. There is no new 1 minute high or anything like that. Simply we had this level right here and we can't trade only off levels. We need a little bit more confirmations before we get into a trade. It got you stopped out, started coming back up, you noticed that, and then you took it to the long side. Now here, I also wouldn't have taken it, but at least there are two reasons to take it to the long side here. The first thing is the low of the day level or the low of the pre-market level, right? The second thing is the fake breakdown right there. And the last thing is it engulfed half of the candle. And if I short stocks somewhere right here for a momentum trade or somewhere right here for a momentum trade or there for a momentum trade, I usually put my stop loss, and I think a lot of people do that. They put the stop loss at the half of the candle for momentum trades. So it's going to the half of the candle. It did a sort of fake breakout. You had a level right there. It's really strong on the daily chart. Enough reasons to take it to the long side. I wouldn't have taken it because it's within the 1 minute candle. I will not really be sure where to put my stop loss at, and I will not be really sure if it's going to make it all the way up to the high of the day. After a new 1 minute high, I might have considered it if we have a wick down there and put my stop loss at the low of the wick, which is coincides with the half of the 1 minute candle, and then just try to get 2 to 1 or 3 to 1 on this trade. Still not bad. There were reasons, not A plus setup, not A setup, but it was decent, it was good, and you held on all the way to the high of the day. I like that you didn't take any partials on the way up here. You just let it run. You waited for a signal, which is a new 1 minute low for your first partial, and then you took it or exited on a new 1 minute low. Now this was an ABCD pattern on the 1 minute chart, but this is the type of ABCD patterns we don't really recommend taking. Why is that? Because it's extended from the 9 moving average on the 5 minute chart. And remember what we said, if you're having an ABCD pattern on the 1 minute chart, it doesn't mean that this is a perfect ABCD pattern. It is already extended and it could just simply be topping up right there. It could break out sometimes, but how much of a move will it make after it breaks out? We need a little bit more confirmation before taking it, and we need a pullback before taking it to the long side. And this is why it failed. The second thing, and I really remember this, let me actually show you something, guys. It wasn't only not an ABCD pattern. Let me download something there. Unfortunately, guys, this is ugly. I just shared this with a friend. You see this? Where was it? Where is it? 939. Reversal to the short side on our scanners. When did this happen? 9:39, somewhere around here. It was called for a reversal on our scanners, right? You saw it as an ABCD pattern, but the indicators which are set on the scanner are telling us that this is actually a good setup to take it to the short side. It wasn't perfect, which is why I didn't take it at 9:39, but it actually did reverse right there. Thank you, Saya. Was this clear here, Alam? Perfect. Now let's see what J-Bond did. I'm in work meeting, so won't be able to respond to any questions, but I'm looking forward to watching this later on YouTube. Okay, perfect. You have everything written there, so I'll just be talking about it there. Next time we'll pay attention to the scanner. You don't need to pay attention to the scanners. Just remember, if the stock is already extended from the 9 on the 5 minute chart, like way extended, and then it's making an ABCD pattern on the 1 minute chart, don't take that ABCD pattern because there was no real pullback. It was already extended. Right, you can't pay attention to the scanners in the middle of the day, like at the beginning of the day, the first 10 minutes. It's just too much to do, right? Let me open it again. Okay, now let's see what we have here. J-Bond traded a pennant setup. And what's a pennant, guys? The pennant is a kind of triangle setups. We are trading ascending triangles, which are having a flat top and an ascending part. We also trade descending triangles, which have flat bottom and a descending part. And we also have pennants, which are also kind of triangles, but they don't have a flat top or flat bottom. They just simply getting tighter and tighter in range until they finally break out to one of the two directions. what is the confirmation for him to take it to the long side? When you are having a pennant, it could go either to the long side if it breaks to the long side, and it goes to the downside if it breaks to the downside. So why did he decide to take it to the long side, not to the short side? First of all, it gapped up in the pre-market. It was above all the moving averages. You see on the 15-minute chart it's above the moving averages. On the 30-minute chart it's above the moving averages. On the 5-minute chart it's above the moving averages. On the 1-minute chart it's stuck in between, but this is totally fine when the price action is a little bit choppy. But look, actually it was above it when he took it to the long side. It was a harmonious chart. What is a harmonious chart? A harmonious chart is a chart which is showing you one possible direction to the stock on all the time frames. On the daily chart, it's showing you that there is no resistance ahead. It's really strong on the daily chart. On the 30-minute chart, there is no resistance ahead. On the 15-minute chart, no resistance ahead. On the 1, 2, 5, all of them showing you that there is nothing literally above you, but you have bunch of support below you. This is the harmonious chart. What did he do? An aggressive entry with no new high. So you see he took it to the long side before having a new 1-minute high. Stop loss was the low of the previous candle, and I assume it was somewhere down there. Intended risk to reward, he wanted to give 5 hours to get 5 hours at the high of the day. And look at these guys, if he held it, he would have got these 5 hours right there. What did he get? He exited at break even. Why is that? The SPY was selling off, so he bailed out. Should be cognizant of when a stock is acting independent from the SPY. Yeah, this was a mistake right there. Why is that? SPY also yesterday, it sold off, right? But look at this. INO is strong. INO is moving because of catalyst. It's moving with really increasing volume. Look at this. You have an average volume of somewhere around 10 to 20 million share size shares per day, but you're having 172 millions. You're having 86 millions today, the first 2 hours, or the first 2 hours right there. Like, this is a stock in play. It's totally independent of the SPY, and the SPY selling off is not really a good reason to just bail on a trade which is moving independent out of it. But look at this, everything was perfect. The reason to exit was the SPY, but if not the SPY, he would have held to his original stop loss, which was down there, and he would have got the 5 hours right there. Good job, J-Bone. At least this was a break-even trade. What is your usual order of analysis when you pull up a chart of a scan? Daily chart, volume, clean chart, catalyst. And then when in the trade, after you have entered, and you're managing, what is your muscle memory? Multiple time frames, check volume, close to watching level 2. So Isaiah, I usually am a pattern trader. I do trade the price action sometimes, but most of the times my trades are textbook setups which I've seen a lot, setup which I'm teaching here in the community, and setups which other people actually taught us, the head and shoulder setups, double tops, double bottoms, ABCD patterns. Those are the setups which I'm trading. And if I want to trade something to the long side, I usually love to see that the daily chart is strong. If I want to trade something to the short side, like really trend to the short side, it should either gap down or downtrend on the daily chart. If the stock, if I do trade it to the short side despite it uptrending, it means I'm not holding it for a trend. This is just simply a pullback, a scalp trade, or just a small move against the trend, because the market is not going straight, it's just going in waves, something like that. The daily chart, I look at it only to consider whether I should put this stock on my watch list or no. If I see that the daily chart is uptrending, the move is really clean, there is nothing in between right there, it can trade clearly, it has catalyst, it's trading on volume, this is stock I'm going to watch intraday. Will I watch it to take it to the long side, to the short side, or an ABCD pattern or anything like that? I'm not really sure, but definitely I'm going to watch it to the long side if I catch or have a setup to the long side. The same thing I did right here. I did trade iron on the 22nd. And why did I trade iron on the 22nd? Because you could see that it was forming sort of an ascending triangle right there, not a clear one, but it was at a breakout area right here, and I was really interested in taking it to the long side the first minute or the second minute after the market opened. So I look at the daily chart to determine whether I should watch this stock throughout the day or no, and then I'm watching the intraday charts for my confirmations. When I am in a trade, I do pay attention to the 1 minute chart and the 2 minute chart. I don't care about big red candles or big white candles. What I really care about are candles which are forming against me. If I see double or triple hammer forming against me when I am short somewhere in here, I definitely wouldn't like this, and maybe in the fourth candle I'm going to exit. Other than that, I don't care about the 1 minute chart and the 2 minute chart much. The 5 minute chart, I look at it to pay attention to pivot points. So let's say I'm short right there, I took some partials, I'll definitely pay attention to this pivot point right here. Is it going to form hammers at this pivot point or not? If yes, I'm definitely might consider exiting, or might just consider seeing what's going to do right there. Maybe if it breaks it and forms another setup in my direction, I would add to my position. Okay, let's see J-Bone's next trade. Didn't I open it? Let me check. We're actually taking too much time on setups or talking here. I'll try to make them faster in the future. And same thing. Actually, this is the one we went through, right? Did he post two similar screenshots? I don't think he did that. I think I opened. Okay, BA. Let's see what he did on BA. Now BA was perfect. Look at this. I'm not sure if this was short or long. If this was short, at least it was decent. Decent move to the upside on the 1 minute chart. On the 5 minute chart, it was just the beginning. It was really early to take it to the short side on the 5 minute chart. On the 1 minute chart, it looked decent for a short, but looking at the 5 minute chart, it was a little bit early because it just started the move. Look at this. This is the 1 minute chart, and this is the 5 minute chart. See, it's just starting to break above the direction. It just opened right there. This is the average 5 minute candle size, so it's a little bit early to take it to the short side there, and it's early to take it to the long side right here. It's not bad for 3 bar setup. Like this is 3 bar setup, huge candle, then a doji, then a new high. But I don't trade the 3 bar setups a lot, especially independently, because it could simply make a new low and go to the low of the previous candle. Remember, this is also a setup right there. So yes, this I wouldn't have taken it, not to the long side, not to the short side. This right here is already a little bit, at least a little bit decent. You're having a stock which is strong on the daily chart, I assume. A stock which broke pre-market level, pulling back right here, having a doji. It tried to sell off into the pre-market level, and then it made a new high. Not perfect, because after a huge drop like this, I usually wait for a W shape, or I wait for it to break out. In this case, I might have considered taking it at the breakout because the range is not so huge, and at the breakout I could put my stop loss at the previous new 1 minute low. But this was decent, this wasn't bad, this was really good. Partial at the high of the day, a little bit of extra partials there, held on nicely there for that partial, and then exited at a new low right there. Let's see what he did after that. After that, he tried to catch a parabolic reversal. He had a tweezer stop right there. This is not literally a tweezer. A tweezer is two different color candles, a white and then a red one. But still, this was a double shooting star at the high of the day. You had a doji at the high of the day with the bigger upper wick, a new 2 minute low where he took it to the short side. Stop loss, I would assume, I personally wouldn't use this as my stop loss. This right here, I wouldn't use it as my stop loss. Why is that? Because look at the 1 minute chart. The 1 minute chart, you're having an engulfing after an engulfing, and if I put my stop loss right here, it means that I put my stop loss within the 1 minute candle. I can't put my stop loss within the 1 minute candle. It should be at least above the bodies. If we had this candle as a shooting star or reverse hammer right there, then I could tighten it a little bit and put it above the body. I don't put it within the body itself, so it would have been a little bit of a wide stop loss, $1 stop loss, but it was already so extended so that it could have made a move to the downside. Like, let's see what it was, where it was in the 5 minute chart. It wasn't really like extended. Like, look at this. I mean, it was decently extended, but the risk to reward wasn't there. It would have just given you maximum 2.5 or 3 hours if it hit the non-moving average on the 5 minute chart. There is a reason to short it. You're having these double shooting stars below a daily level and below the 200 moving average in the 5 minute chart, but an earlier entry would have been good. You still wouldn't have been able to catch a better entry because of the 1 minute chart, right? You can't short it before a new 1 minute low unless you are really sure about something or you see something on the level 2. Other than that, you can't really short it right there. This was the best entry you could get, which didn't provide a good risk to reward, which is why I would have avoided it. The next thing, and I like that you exited at break even, I would have done the same thing. It's bouncing off a pivot point right here. See, this is the high of the pivot point, the daily level, not literally out of it, but closer to it, pulling back, bouncing of that pivot point. So yes, in this case, I would have also exited at break even. So good job managing this trade really well. I'm sure this has been asked before, but what is 3-bar setup? I hear it reference here quite a lot, but never heard of an explanation. So even what's 3-bar setup? 3-bar setup, it consists of 3 bars, similar to its name, right? The first candle is a wide bar candle, second candle is the small body candle, third candle is a continuation. 3-bar setup because you get your entry on the third bar. It's a huge move, then it's a consolidation right there, let's say on the 5-minute chart. On the 1-minute chart, you're having confirmation candles, small hammers inside, which are confirming the direction of the trend, and then a new high on the 5-minute chart, and you take it to the long side. Stop loss is the low of this bar right there. Why I don't take this setup a lot is because there is another setup which is similar to this one, but instead of it making a new high, it's making a new low and then dumping all the way down there. See, so it could be taken literally to the both of the direction. Both of them are setups, and if someone sees this, he would definitely be waiting for a setup to the direction he's biased to. If it's already like so extended, some might want to take it to the short side. If someone is really long biased on it, he might want to take it to the long side up there. And I don't like 50-50 trades unless there are some other confirmations which might make me take this setup right there. GG, let's see what you did there. So GG, I see that you tried to actually catch a reversal right there, right? A little bit of chop, similar to my INO trade or INO chart. This entry wasn't really bad. I can't tell what there is on the 1-minute chart. I wish I saw it there on the 1-minute chart. If you had some good confirmation candles on the 1-minute chart, then this was perfect. If not, you had some confirmation candles on the 2-minute chart. What I don't like is the selling pressure on the top. So if I see this on the 2-minute chart, but the wicks are showing me the opposite direction, with me not seeing anything on the 1-minute chart, I would avoid them. If you had those selling pressure wicks on the top of the 2-minute chart, but on the 1-minute chart you had some confirmation candles, hammers for examples, and then you took your entry, then that was decent. Let's see what you did there. You took it to the long side, you get stopped out. You try it one more time to the long side and you get stopped out. Then this is a little bit too much, right? And this is a little bit too wide of a stop for these type of reversals. You're trying it 1/3 time and then you get stopped out. And look at this. On all of those entries right here, at least on the 1-minute chart, I don't see any confirmation candle, right? See this selling pressure, red candles, a really huge candle, which is not confirmation candle, which one we are not trading off, a new 1-minute high, but not after a confirmation candle. On the 2-minute chart, this was the best entry, like at least it was after 2 dojis. What I don't like is those wicks right there. Now look at this, literally nothing telling you to enter or exit. There is no confirmation candle, not here and not here. Now look at this. Here you are finally having a new 2-minute high. You had it before, but what I want to tell you is you are finally having a 2-minute high after a confirmation candle on the 1-minute chart, which is the hammer, right? And it finally worked out. You are taking it to the long side, putting your stop loss a little bit below the bodies, and you're getting a perfect move right there. You lost 3 hours and made 6 hours, and that's a really good risk management. You see, you lost 3 times, you lost 3 hours, and you caught a nice move and you made 6 hours. So basically you are up 3 hours after all, right? That was a really good risk to reward right there. What about the doji on the 5-minute chart? Is that confirmation? It could be confirmation, yes. If you have a good confirmation candle on a bigger time frame, this is actually so loud, I'm sorry about this, guys. I'll close the window. If it's so noisy, let me know, because I can't hear anything because of this. It's noise cancelling. Anyway, if you are having a confirmation candle on a bigger time frame, then this is a good one, especially if it's giving you the good risk to reward. If you're the bigger the time frame, the better the step is. And if you're having confirmation candle on the 5-minute chart, on the 2-minute chart, and on the 1-minute chart, that's even better. Why is that? Because there are traders who are trading of the 1-minute chart, there are traders who are trading of the 2-minute chart, there are traders who are trading of the 5-minute chart. if those traders here and those ones here and those ones here see the same thing, this will definitely be pushed back up faster. I see that this was perfect. And remember, yeah, guys, this is something I will talk about in the webinar. If you are having a new 5-minute high, then your target could be the 9 on the 5. But once you start having a new 15-minute high, then you could put your next target at the 9 moving average on the 15-minute chart, which Gigi did right here. She was the video which me and William did yesterday on YouTube, and I guess that was the reason she held. You're still good at holding even without that, so good job on this trade. The small downtrend, downward triangle indicates short position, and the green upward triangle long position. Yes, if this is a triangle which is forming like this, it's showing you it's showing that the stock most probably going to go to the downside. If it's like this, then it's showing you that most likely it's going to go to the upside. Remember to pay attention to the rest of the time frames. If you see a triangle on the 1-minute chart, something like here, let's say something like that, when it's way extended from the 9 and the 5-minute chart, this is not a perfect triangle. It's a small time frame, it already did a huge move. This triangle means nothing right there. Let's see what you did here on RAD. Let's get back there. So RAD, you're taking this thing to the long side after a hammer on the 5-minute chart at the break of this pivot point right here. And what was your stop loss initially when you took this thing to the long side? A new 5-minute low, the body or the wick? I think it would be the wick. Like the best thing to have right a stop loss at right here is this. Then I see this hammer which is trying to sell off. It's trying to come back up. I might consider moving my stop loss right there. But look at this, it eventually works out, right? And what were your reasons to exit right here? I could tell some reasons. It's having a doji at the high of the day, a new 5-minute low. But look at this, it's getting literally into the pivot point. It broke it by a few cents, but a few cents doesn't mean anything. It could break the pivot point by a few cents. It could bounce literally out of it, and it could just not reach it and then bounce somewhere at a level a little bit above it. So those levels, they are range. A little bit of huge order could make it weak right there. So yes, there was doji, but look at this doji. This doji was with an upper wick. So it was more strong than its weak. The second thing you would need to pay attention to is this move right here. This was a decent move to the upside with really small pullback right there. Even this is a decent move, and now it's making a pullback right there, which is around 50%, right? Remember that if you see a 50% pullback on a move, then this is still a decent pullback, even 70%, 60%, and I love 52, 70% pullbacks on ABCD patterns. So this right here, yes, it looked like a drop. It looked ugly and it wasn't perfect. I mean, it would have shaken, I think, any one of us right here looking at this drop right there, especially with it making lower high, but still forming higher lows, which also looked good. It started to form sort of a pennant right there, which eventually broke to the long side. Not bad. I mean, you managed it well. You got a good entry. You exited break even. If you held on to this one, it wouldn't have been bad as well. But I get what you exited right there. This would have also scared me a little bit. You see that it's actually downtrending, going up, making a lower high right there. This is kind of more weak than it's strong. The daily chart looked good. It was above the moving average. It was more on an uptrend, and you entered on a new 15-minute high, which was good. So basically, there were a lot of reasons also to stay there. Maybe a little bit of psychological problem there, but still, it wasn't bad. Jason traded the spine. This was good. I love it. Look at this. You're having a huge increasing volume right here. This is a climactic volume, and the climactic volume is a volume at which you see one bar at least 2 times bigger than the average bars you have before. So this is the climactic volume. It didn't reverse immediately, it actually decided to sell off, which happens. That's totally fine right there. Then you're having a reversal candle and a new 1 minute high. And if I was watching it, most likely I would have taken it to the long side there. I would put my stop loss a little bit down there and I would get stopped out in this thing. What do we have after that? We're having a fake breakdown. Immediately gets bought back up, closes as hammer, and I would have re-entered here, and you actually took your entry right there. This is perfect entry right there. This would be my stop loss. I'm not sure what was your stop loss there, but this would be definitely enough for a stop loss, and then you're taking partials all the way up. This add I wouldn't have done it, added it, because this is an ABCD pattern on the 1 minute chart after a huge move and after it was already extended. This is already a huge move. You could see that on average on the SPY, this is the move which it's making, right? This is the move which is making an average, and the bigger pullback is to be expected right there. I guess you added right here and then you decided to exit the rest closer to your break even. Okay, that was your stop loss. Yeah, this was a perfect stop loss, perfect entry. You partialed really well. I wouldn't have added right there because I don't like ABCD patterns on the 1 minute chart unless it's making a bigger pullback. Like this was at least a little bit more decent. But then the news came here. Okay, I see. Because it was looking really good and I was wondering where this volume came from. Okay, but good job here. This is a really decent and really good. Michael, let's see what you did there. SRE to the long side. So we see here, I personally wouldn't have taken this one. This is not 5 minute chart, this is 2 minute chart. Okay, this is decent. I thought this was a 5 minute chart. Stock breaking up above a pivot point right there. After a pullback, you are taking it to the long side on the pullback. This was really good. Also reversal candle right there. You're having a pre-market level right here. It's breaking it down, but immediately gets bought back up into the range. Now this is showing you that this stock actually has some strength in it. It's breaking the pre-market level right there. This would have been a good entry to take it to the long side. This is an engulfing crack setup, a hammer on a red candle, then an engulfing candle on the 2 minute chart, then the crack of it, which is the new 2 minute high engulfing crack step. This was a perfect entry right there with the stop loss half the candle or the low of the entry candle once it actually cracks it. So yeah, this would have been a really good entry right there. You miss the entry, you wait for a pullback. I'm not sure I would have taken it on down there. I would have waited for a new high with my style, but this is my style. If this works for you, this is really good. It definitely was more strong than weak. It did break the pivot point right here. It was at a breakout area for the next pivot point right there. Took it to the long side. A little bit of early partials, right? If you take it to the long side right here, you can't put your stop loss 1 cent or 2 cents. You should put it at least at the low of the body, right? So this was around 1 hour move right here. This was a little bit too tight or too early to take partial at. The next partial was at a daily level, which was really smart. I like that. Next partial, you took it at another level you had, and I see that you had another level right here where you took a partial, another daily level at the break of the low, and at a new 1 minute low. So all of those partials, I like them. They were really smart. When the stock is simply going in your favor, if you had small position left, you could leave it for a new 1 minute low. If it's a really huge position, you could partial similar way you did at your levels. But the first partial was a little bit early. If it was 10% and you just wanted to, or 20% and you just wanted to feel safe after the partial, then it's fine. But if it's a big partial, 50 or 60%, I would just wait a little bit more, not to kill the profits which I could get out of this trade. Okay, let's see what you did. AMD ABCD pattern. Is the entry good? Almost stopped out. First of all, I wouldn't really call this an ABCD pattern because it's forming a reverse ABCD pattern. You go with the trend, right? If this is the big move right there, this could be the pullback, right? it is an ABCD pattern, if you want to call it an ABCD pattern, because of this move right here, but it's not really an ABCD pattern. Maybe view up breakout, reversal pattern could be, but not an ABCD pattern yet, okay, because the trend still hasn't established right there. For it to be an ABCD pattern, you would need it at least to make a decent move, then pull back, and then you take it for an ABCD pattern. But this was kind of a reversal. A double bottom with the second bottom higher than the first one, sort of an ascending triangle forming against the trend right there. The entry was really good. I like it. You are having confirmation candles, a doji, a hammer, new 1 minute high right there, new 5 minute high right there. It's sort of ascending. You took it on a new 1 minute high. For long, I'd put my stop loss below the badges right there, or around the wicks. Both of them really work out well. And then you are going for the view up breakout. I guess you got the 2 R's because this is the tight stop loss and this is the reward. That's why I took the partial early and then multiple partials right there. Not used to see white triangles actually, but that's interesting. It's a matter of preference. Last partial on a new 5 minute low after a doji. This was really good. This is a view up breakout move. Yeah, it could be a view up breakout. Let's see what it did on RAD right there. Same thing right here. Sort of an ascending triangle or a double bottom with the second bottom higher than the first one. Yeah, it is triangle. You mentioned it actually. I see that. Took it on a new 1 minute high after the hammer, which was a perfect entry in this case. I guess you added at the break of the triangle and it got you stopped out because of that, right? Still the breakout didn't happen. It had a little bit of wicks up and down right there, and the range wasn't tight. I usually add for the break of the triangle if the range is tight like this. You see right here the range wasn't tight. You had still around, I don't know how much was that. That was around 40 cents, right? That was still 40 cents range on that triangle. So the entry, the add for the breakout was a little bit earlier. I remember that when we explained those ascending triangles before, you have 3 possible entries. The first entry is at the breakout. The first entry is as close as possible to the ascending part with the stop loss. It will not be like that. It will be something like that, okay guys? It will be something like that. So your entry is as close as possible to the ascending part. There will be candles right here, sort of candles like that, maybe lows right here. We'll break it a little bit down there, we'll break it a little bit up there. So your entry as close as possible to the support. And what's your stop loss? Your stop loss is the low of the wave. If you take it right here, your stop loss is the low of the previous wave. If you take it right here, your stop loss is the low of the previous wave. So if you take it, if you see a clear ascending triangle, and here it wasn't clear, you can't take it right here for a triangle when the triangle wasn't really formed yet. It's just a little bit early to take it as close as possible when you have only 2 touches, right? It could just simply break on this thing. If you are getting on the 3rd touch, then that's good because you had 1 touch, 2nd touch, you had on the top side 1 touch, 2nd touch, maybe 3 touches. You could draw them and you could anticipate that this is actually a triangle forming, and you could get an entry as close as possible to the ascending part. Now the second possible entry is somewhere in between, right? You get inside the range. You could draw just some range visually, and you get in somewhere right there with the stop loss below the wave. The third possible entry is at the breakout, but that doesn't mean you're getting in at the breakout here and putting your stop loss at a new 1 minute low. If you are getting in at the breakout, your stop loss is at the new 1 minute low after the range is really tight. It's breaking out right here. You put your stop loss at a new 1 minute low right there because the range got really tight, and then you just go for the move. If the breakout happens here, oh my god, this is so ugly. I'm sorry about that. If the breakout happens here, the range is still so wide to have your stop loss really tight right there. And this is what happened right here. You're adding in at the breakout. The range is not really tight, but here the range got really tight, and if you take it at this breakout right here, you could put your stop loss at new 1 minute low. And after that, you just start taking partials. Again, a little bit of extra partials, but really good reading of the price action and the pattern there. Ivan, let's see what you had there. The last picture, okay, I think it's this one, right? So this is your trade. It has the 1 minute chart and the 5 minute chart, and this was, what stock was this? Save. Okay, I see it. It's saved. Thank you. So let's see what you had right there. Same thing. This is a really good pattern right here, and I love this candle. So it's starting to make higher low waves, making sort of a doji with a bigger upper wick, breaking to the upside. I guess this is what happened right there at 9:30. It's breaking to the upside, immediately starting to sell off, and that happened within that candle. I guess that sell off didn't go back to the low. There is the wick right here. Did an engulfing. This is an engulfing crack right here. You could take it to the long side on this candle, put your stop loss at the low. You could wait a little bit, and I love this candle after that because it's giving you a good risk to reward potential. First of all, you're breaking the high of the day. You're breaking the engulfing crack. You're having a 5-minute open range breakout setup on an engulfing crack setup with a good potential stop loss on the 1-minute chart. You don't want it to break this 1 minute, because if it breaks it, it will have room all the way down there, right? And this is just a little bit too much for a stop loss. You put your stop loss right here. If it breaks this, you exit of your position, and if it starts coming back up, you could always re-enter with a new stop loss. So this is a good entry. I'm not sure what was your stop loss, but this would have been a perfect stop loss right there. And then it was there. Okay, that was good, and that was a good risk to reward right here. See, this was and it was also below view up. Yeah, the stop loss was below view up, was below the doji. That's a really good risk to reward. Another good partial right here. I like that you survived the pullback, right? But there was no reason to partial right here. You didn't partial on the way down. You were really patient for that pullback. You knew that it could come back up. It did come back up. Maybe here I would have taken a partial because it started forming a double top with the second top lower than the first one. On the 5-minute chart though, it's still showing you strength with this wick right here. Then it started coming back up. You didn't exit all out. You partialed all the way there, and then you exited at a new 5-minute low. That was really amazing. Good job there. I get scared out. Yeah, I see this. It almost touched your stop loss right here, but good job holding it. Let's actually see what happened to my phase trade. I've been doing this trade review here, and I'm not sure what happened to my trade there. Phase. So this trade I've taken right before our trade review, and it actually worked out literally to the penny. I got lucky here, I guess. It never would have stopped me out actually, so I guess I would have still been in it if it didn't get me filled. And let me go through this trade quickly. What did I see here and why did I take it? It was called in our chat room on the community, the reversal scanners, and it was called on this candle at 11:46, I guess. It did this reverse hammer, and I started getting interested in taking it to the short side. First of all, the 5-minute chart, you see that it's uptrending. It's extended from the 9 on the 5-minute chart. The 9 by that moment, it was at 970, right? And I saw this reverse hammer right here, and I was interested in taking it to the short side on a new low. No new low, double dojis right there, selling wicks right there. Took it on a new 1-minute low, and my stop loss in this case, it was around 10.48. I mean, it was around 15-16 cents right there. By that moment, the 9 on the 5-minute chart would have given me the 4 hours right there, but I noticed that it was consolidating right here, and see, I didn't bail on this trade because I didn't have any confirmation candle forming against me except for this small red hammer right here, and I did expect that it could make a double top right there. It did the doji, and I think the smart decision for me would have been to add after this candle because this is a way better confirmation candle, and in this case I could have tightened my stop loss a little bit above the bodies. I would have had around 5 cents or 6 cents stop loss, and this would have been a perfect reward right here, but I don't know why I didn't do that. Anyway, put my stop loss at 1985. Why did I use 1985 by that moment? Because I noticed that the 9 moving average, it's always sloping up, and by the moment the stock gets into my target, the 9 could just get a little bit higher, and 970 is not a good target, especially if I'm not watching the stock. If I was watching it, I could have just partial depending on what it's doing, but since we were in trade review, I just put a range order right there. It got me filled literally to the penny. Now it continued consolidating, and look at this. Even if I added and I put my stop loss right there, I wouldn't have been stopped out yet. It's just still working out right there. I see that it's forming lower highs. It's a descending triangle, and I expect it honestly to sell off even more. On the daily chart, it's a little bit extended. It's way extended actually on the daily chart, right? So it could actually start selling off here. Yeah, it could. So guys, do you have any questions? Finished 10 minutes earlier today. That's fine. So if you have any questions, I could go through them. Guys on YouTube as well, if you have any questions, feel free to ask. And if not, I have the morning 5-minute. What were your trades today? My trade today was on Pays and on INO. INO got a little bit missed out on it. Messed up. Let me see what else I traded. I think there was another stock I've traded. I just don't remember what it was. Pays, INO. No, not really actually, yeah. It was Pays and INO. Do you typically, do you know that webinar? Yeah, it's the Mountain Pass. Isn't it yet uploaded? I think it's uploaded in the Success webinar. Do you typically take the slope of the MAs into the consideration? Yes. If the moving averages are sloping to the upside, definitely this is telling me that the stock might still be strong. If the moving averages start sloping down like here, I see that the non-moving average actually starts sloping down. It's forming a descending triangle. It's way extended on the daily chart, and I honestly expect it to actually break down. And if it breaks this pivot point right here, it could just sell off to the next pivot point, which we have at 947. So, and the moving average is starting to slope down, which is showing me that the uptrend started getting weaker right there. GG, I usually take screenshots. I'll show you what I have right there. Let me move it right there. I'll open that. So right here, I have all my live trades. Sometimes they're simulator because these were my live trades since I started trading, like day ones. Before that, I had another journal going, but you see, these are all screenshots of my whole trading days, 300 and something days. Live, no Saturday and Sunday, so it's over a year. And there were some simulator trades, and guys, I will share with you some stuff embarrassing. I will show you how I started trading. I'll show you the mistakes I was doing, just to show you that all of us were doing the same mistakes, and all of us had, maybe, I wouldn't say embarrassing trades, because at this moment we are learning, right? We do some stupid stuff, we do some over trading, we go against the trend, and I have some rules right now which are telling me not to go long when the stock is so extended from the 9 and the 5, not to go against the 9 and the 5, not to trade if I have more than 3 loser trades. But where did I come with all of those rules? I came with them from my trades right here. Not all of them live, you could see here. Day 4 Spy Sim, Day 5 Apple Simulator. When it's live, I don't have the sim word in it, like Day 6 Live MS. So some of them simulator, some of them live. But look, I'll show you what I had. You see this right here? This was going short, this was going short, which is not bad actually. This was smart from me. I took it short when it was extended from the 9 and the 5, which didn't work out. Then I'm taking it to the long side here on the way down. Remember what I'm telling you guys? Don't go to the long side when the stock is going down. It had a huge engulfing candle, and I have no idea why I take it to the long side right here. Then I'm having a 1 minute hammer right there, but when the stock is starting to drop down, now I'm having that rule, which is telling me that if stock making an ABCD pattern, after a parabolic reversal, I wait for a W shape, and then I take it to the long side. So now, according to my rules, this is the good entry for me to take it to the long side. Not here, not on the first 5 minute high, and not there, right? So you see, right here, I'm trying to take it to the long side. I have no idea why. Again to the long side, and I'm getting stopped out. No idea what it did there. Short side because the long didn't work out, and then I get stopped out. Really tight stop losses, not technical stop losses. Like the technical stop loss right here is here. The technical level, if I take it, I'm not sure, to the long side, it should be at least right there, right? So you see, those are not perfect trade. Let me show you something else. This is Apple. This is me taking it to the long side when it's way extended from the 9 on the 5-minute chart. Remember what I'm telling you in those trade reviews? This is just my experience. What I'm sharing with you right now is what I noticed with my trades, and I don't want you to just face the same mistakes I was facing. I want your learning curve to be a little bit faster than mine, right? A, B, C, D, and this is an ABCD pattern, a new 1-minute high, but it's extended from the 9 on the 5, which is why it simply doesn't work out. Then I'm taking it to the long side on the way down, and it's getting me stopped out. I shouldn't take it to the long side there. I should take it after a W shape to the long side, which is somewhere right here after the W shape, and then just go for the risk to reward. Let's see how I did on that live trade. I don't really remember. There was like day 6 live MS. This was a trade I've taken live right there. Wasn't bad actually, but I'm not sure if I knew what I was doing right there, because at least here we had a daily level, new 5-minute high, new highs right there, early partials, right? Should have held on better, because I'm sure that in this trade my stop loss should have been right there, and this was early partial right there. Good technical level, it worked out really nicely, but that was a little bit of an early partial right there. This is me trading SKX for a parabolic for a reversal for an ABCD pattern with no W shape. See, A, B, after a huge drop right there, new high, and I shouldn't take that on these type of pullbacks. I need to wait for a W shape, you see, after which I have taken it right there. By that moment, I didn't have this rule, and I was taking the first high on ABCD patterns, which is why a lot of times I was getting stopped out. But now that I'm having that I should take on W shape after an ABCD pattern, I would avoid these type of trades even if they work out. I mean, your class on overtrading is amazing. Thank you, Ralam. Like this is again day 6. I just want to see if there is one more chart, like a really embarrassing chart. Day 7 SPY. Look at this. I'm going against the 9 on the 5 to the short side. Now I don't do that. I have a rule which is telling me not to go against the 9 on the 5. Trying to short it again against the 9 on the 5 on a new 5-minute low, and it's getting me stopped out. Tried to short it multiple times. Finally it did work out. But now I have the rule which is telling me not to go against the 9 on the 5 unless there is a pattern forming in my favor. So yeah, that's it guys. I think enough of that, because there are a lot of charts. I just wanted to show you the mistakes which I was doing on my Mick. The 9 on the 5 is the 9 moving average on the 5-minute chart. When the stock is uptrending, it typically is making a pullback to the 9 on the 5-minute chart a lot of times. Not all the time, but a lot of times it's just holding the 9 and the 5 until it just starts sloping down, starts forming some pattern, and then breaking down. So before I used to try catch a reversal against the 9 and the 5, but now I have a rule which is telling me don't go against the 9 moving average on the 5-minute chart unless there is a pattern confirming it. So yeah, I just showed you this just to show you that those mistakes we all usually do at our first days, and what I'm sharing with you here when I'm reviewing your trades is what I learned from my own mistakes, and I was doing the same mistakes, and now I'm way better, and you will become way better as well. Your trades right now are amazing. They're actually way better than mine when I was starting my trades. So yeah, that's it for today guys. If you have any questions, feel free to email me, ayman@beattabletraders.com. YouTube, I'm typing my email. If you have any questions, feel free to email me. Have a good day everyone, and I'll talk to you in the chat room. Bye bye.